Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets trade lower on the last day of Samvat 2073. The Nifty fails to hold on to 10,200. Axis Bank is the top Nifty loser after the lender's bad loans jump in yet another quarter, pointing to continued stress on the balance sheet. International investors show interest in SR Steel and Bhushan Steel stress assets. And Chinese President Xi Jinping warns of serious challenges while laying out the roadmap to turn China into a leading global power by 2050. Big voices lined up on the show today. Market veterans Ramesh Damani and Hiren Ved tell us what they're betting on in Samvat 2074. Jairam Sridharan of Axis Bank tells us what's wrong with the bank. And new kid on the block, Mass Financial Services Chairman Kamlesh Gandhi talks about expansion plans. All that coming up in a moment from now. But let's talk about how the markets are faring at this point. Pradeep is taking a closer look at some of the stock action. We're not seeing too much of Diwali cheer today, have we?
Yeah, so it's a pre-Diwali profit booking, you could say, because effectively today is also the last full trading day of the current week. Tomorrow we'll have a short Muhurta trading session. And, because of that, in fact, even the Bank Nifty option expiry has been preponed to today. So focus is also on that. And on such an important day for traders, if you have to deal with a highly disappointing Axis Bank number, there is really nowhere to hide if you talk about financials. So there is selling not only in Axis Bank, that one is down 8%, but you look at ICICI Bank, even PSUs like SBI, because Street is not only, is not convinced with the explanation that Axis has given out that, this roughly 5,000 crore has slipped because of RBI recommendation or RBI audit, so to say, and this is not it should not be taken as a, recurring slippage rate or so, but clearly traders are not convinced or investors are not convinced. Every brokerage has cut down the target price. Some have downgraded this stock. And now they're extrapolating the same to ICICI Bank because more or less ICICI Bank has also got the similar lending profile. Nifty Bank has anyways been an underperformer, and now because of this number, you see a lot of intense selling pressure across the board. So what is the trade left actually? Well, some stocks which have come out with better numbers, like we have Reliance moving up today after yesterday's profit booking, and then you have some mid caps like for example you could file Futures Lifestyle, which has moved up because there is a news that they are probably going to tie up with Flipkart. So either news or some good number. That's the only hope for any stock to sustain in today's trade. Even in mid cap, some outperformers like Avenue Supermart are today under selling pressure because the stock has moved quite a bit, and some amount of profit booking before extended holidays I think is in order.
How much of what are you seeing in terms of volume activity today?
So volume activity so far has been average, I'll say, but there is focus on options side in Nifty Bank. So at the end of the day, you'll definitely come out with, a kind of a record volume number, but that is on FNO. On the cash side, I think we are on track to around 30,000 crore. That's the average in cash market of late.
Okay. Pradeep, thank you for that. Muhurta trading does not always augur well for the markets. That's according to data compiled by Bloomberg in the past 10 years. Trading during the auspicious period has ended on a positive note 7 times. But it's a different story when the market fully opens after the celebrations. The first day of the Hindu calendar has seen stocks close lower 80% of the time in the last 10 years. Take a look at the chart. So how have individual stocks performed in the year that's drawing to a close? Darshan and Yatin are standing by to take us through some of the stocks. Yatin, let's start with you. Which were the top performers? Take us through the leaders and the laggards in Samvat 2073.
Thanks for that, Harsha. And if you look at the entire Samvat performance, metals was one sector which was hated by a lot of analysts, but clearly that is one pack which has outperformed significantly. In fact, if you look at stocks like Hindalco and Tata Steel, both of them have generated returns of over 75%. So that is on the surprising side, wherein it has worked anti-consensus. But what has worked on the consensus side is the pharmaceutical space, which has underperformed general markets. We have stocks like Dr. Reddy's and Lupin down by nearly 28%. It was a pharma pack, of which Reddy's and Lupin probably have been seeing some big cuts coming in Samvat to Samvat period, which is probably the last 11 months or so. What's done well is DMart. That is one kid which has done extremely well after its listing. Not even 2 quarters into reporting earnings, and we have seen market capitalization cross that 75,000 crore mark, 3 times up versus the issue price, or probably in the last Samvat to Samvat series. If you talk about broking stocks, they have done extremely well. The financial services space doing extremely well. India Bull Ventures up 10%, 10 times, in the Samvat to Samvat period. MK Global, Geojit Financial, these are the free brokerage stocks which have delivered almost returns in excess of 3 times. Of course, what's not worked well in the mid-cap space is, some telecom stocks. But, over to Darshan, wherein he has some interesting takes on the mid-cap space.
Well, Yatin, if you're looking at what's happened this year, it's basically the old school or the old stocks that have made a comeback this time. So metals and oil again find mention in the counters which have done well. So these are the counters which did well. So you have the Hindalcos and the Tata Steel and the Reliances of the world which did extremely well. Now, interestingly, 8 of the Nifty stocks have given returns in excess of 50% this time around. So it's been an extremely good year. So more than 8 stocks out of the 50 giving a return of 50%, extremely strong. DIIs have bought in close to almost 1 lakh crore in the cash market this time around. So the liquidity is coming in because of the SIPs or the mutual funds that are there post demonetization. There was no other asset to invest, so money is flowing into equities. Reliance makes a comeback at the top of the helm as far as market cap is concerned. 5.5 lakh crore is the market cap. TCS and Reliance are the only 2 companies which have a market cap in excess of the 5 lakh crore mark. For the first time, all the 3 oil marketing companies are there as part of the Nifty. It is the first time that's happened. So that's very interesting that happened in the Samvat. Kotak Mahindra and IOC made place as far as this is the 1 lakh crore market cap, IndusInd Bank and Bajaj Finance. What made part of the 2 lakh crore market cap was Kotak Mahindra Bank and IOC, and over 260 stocks. We're talking about stocks above the market cap of 100 crores. They have doubled in a value of 1 year. So it's been very, very interesting as far as some of the counters are concerned. Some stocks that I would want to take off: India Bull Ventures gains of almost 1400%, HEG 700%, Goldstone, Goa Carbon, Venky's, all of them giving in excess of 400%. So it's been a fabulous year for some of the investors who's invested in certain of these stocks that we've named.
260 stocks have doubled in this year.
So this is, Harsha, on a market cap in excess of 100 crores.
Sure.
If I include all the stocks, the number will be much higher. So we are taking a 100 crore market cap to be a reasonably decent sized company.
Sure.
And believe me, there are so many companies which have market cap less than 100 crores, which may have been 4-5 times, I don't know what. But 260 stocks. So you had a sizable chunk in which people talk about 15% CAGR, 260 stocks, 100% within 1 year. And if you had India Bulls Ventures in you, it's 10 times in a year. So 10 times, almost more than 10 times in a year. So that's a fabulous return.
Good year indeed. Darshan, thank you so much indeed for joining us with those details. Let's talk about our special Diwali series, Saal Mubarak. Neeraj sat down with market veterans Ramesh Damani and Hiren Ved to find out what their picks are for the next year. Here's a slice of that conversation.
I think the biggest threat to global markets is the onslaught of technology. What is happening with automation, Internet of Things, robotic intelligence. I think India as a consumer doesn't understand that. I mean, how far ahead China is of us, how far Germany is in robotics with us. So I want to build a portfolio, because I'm a domestic focused investor, that is somewhat insulated against technology coming and taking jobs away from manufacturing, taking jobs away from so many other businesses, right? So the 4 boxes that I came up with, for example, real estate. Property has some immunity from technological threat. Airlines, again, I don't think the Hyperloop is going to take off very soon, so we have some ability to be there. Some of the food businesses, liquor businesses, quick service restaurants, I think will do well. So you're trying to construct a portfolio, gaming, entertainment. I think people come to India for its 1 billion consumers, not for the infrastructure play, not for the steel play, but for the consumer. I mean, that's the centerpiece of these 4 things that I'm suggesting to you. I think they're insulated technologically, and I could use the Warren Buffett test for this. If I buy a basket of these stocks and go away for 10 years, am I confident that they would be better off in 10 years than they are now, as opposed to, say, a steel company, as opposed to, say, an OMC? Probably. So that's what I'm constructing a portfolio that tries to mitigate the risk of technology overrunning these businesses.
Hiren, just one question. We're moving from suave and sexy to something that is boring but has made an advent in India in a big way, and that is insurance. Globally accepted sector, present across, and we have a 35% weightage in the index without having a major insurance play until recently. But the response, because of the valuations, maybe was a bit lukewarm. Do you think this is a space which could actually be a money spinner over the course of the next 4, 5, 6 years? Listed insurance in India?
I mean, without doubt, I think insurance will be a big sector. Having said that, I think I've looked at the numbers and I don't think that insurance penetration in India is as low as what people think them out to be. But I think where the play could be is that the ticket sizes could increase. So, you know, as the wealth effect takes on, and health insurance, I think we're way behind global standards. I think also the way insurance was sold to people, right? Sure. It was literally pushed down the throat. I think with digital channels coming into insurance, I think you will have younger people buying insurance digitally, and therefore you could see early adoption as opposed to people buying insurance in their mid-40s and 50s, or in the later 30s. But I think insurance will be a big sector in India, because I think we're just seeing the onset of financialization. In fact, demonetization had a big role to play, because all the deposits that went into banks gave the opportunity for the bank RM to sell some insurance product to his customer. Because that was a heightened 60-day period where you had a lot of interaction with the bank branch, and I think that I think will carry on for a long time to come. So I think a day will come when LIC will get listed, and given its size and stature, I mean, it will have to be part of the Nifty and many other companies as well.
You can catch more of this conversation at 1:30 right here on Bloomberg Quint. Okay, now let's take a moment to focus on one stock, Axis Bank. Earnings have missed estimates. The bank has reported a high proportion of bad loans. Remember, this is the second time this year that the bank has bumped up its bad loans. In May, it disclosed about $1.5 billion worth of bad loans. Now it's classifying or reclassifying $750 million worth of bad loans. Take a look at this chart from the terminal. If you compare the stock to its peers, Axis Bank, that's in white, that's how poorly the stock has performed in comparison to its peers, that is the BankX in blue color and the benchmark Sensex in purple. That's the story of Axis Bank, and that's exactly why that sentiment is wearing off on bank stocks today. And let's see how that story unfolds. But what's the street saying? Analysts said at least 5 brokerages have cut their target price of Axis Bank. They've been unimpressed with the management's promises so far and have raised some red flags. Shraddha is standing by to take us, who's been going through some of those reports. Shraddha, tell us, what are those red flags raised by the brokerages, and where is this bank headed?
Well, to start off with, most of the broking firms have trimmed their EPS estimates for Axis Bank for FY18 and FY19, especially after the management said that the credit costs for the bank would normalize in the second half of FY19, which only means that earnings will remain depressed for a longer period. But most of them have actually retained their current ratings while trimming their target prices. Again, the target price cuts are not very significant, but Bank of America Merrill Lynch has said that they've cut their EPS forecast by 34% and 13% for FY18 and FY19. They maintained a buy and cut the target price to 590. More interesting read-through coming from Credit Suisse. They've maintained a neutral rating and cut the target price to 485. They're saying that the results are a negative read-through for other corporate lenders' Q2 earnings, and they believe that now that their total stress ratio is more than 10% of the loans, additional provisioning requirements will be large, and with the CET1 of less than about 11%, they expect equity dilution to come in the next few quarters for Axis Bank. They've also cut their FY18 EPS estimates by as much as 25%. CLSA sounds slightly more positive. Surprisingly, they've maintained a buy and cut the target price just by about 8 rupees from 620 to 612. They've chosen to focus on the loan growth numbers coming in at a good pace, the healthy CASA ratio, and the fact that its subsidiaries are scaling up, and hence that buy rating despite the disappointing numbers. And we have UBS, which has maintained a neutral with a target price of 575. They do say that the non-performing loan uncertainty remains high, and because of that, the earnings pressure will also continue to remain high, while ROEs will remain subdued in the near term. They've said that they're keenly watching the impact of RBI's assessment on the bank's reported gross NPL. So not surprising to see that not just Axis Bank, but even the likes of ICICI, Yes Bank and SBI are under significant pressure today.
Shraddha, thank you for that. That's what the street is saying. Some of the top brokerages have, in fact, turned negative on the stock. Jairam Sridharan, the CFO at Axis Bank, here's what he had to say to understand where the pain lies and how the lender plans to cut down its credit costs. Listen in.
Slippage numbers are not increasing. I think you will see that number continue to moderate. There might be some blips on a quarterly basis. If you actually see on a net basis, the gap is not there because we had 1,000 crores of recoveries in this quarter compared to very, very limited recoveries last quarter. So on a net basis, the slippages were actually pretty much the same. If you look at the first half of the year, for example, we've had about 250 basis points of credit costs, of which about 75 basis points has come from this sort of RBI divergence thing. We see the rest of the credit costs as continuing to perform as per our expectations, and we are not unduly concerned about that at this point. Some of the accounts that have recently slipped in this quarter, for example, there are some of them in fairly advanced stages of recovery anyway, so you will end up seeing, particularly in one of the large accounts, you will end up seeing recovery coming up pretty much in this quarter itself. As we look at credit costs and the trajectory of credit costs, we see continued moderation based on the reducing size of the total stressed asset pool that we have in the bank, as we have shown in our presentation, and based on that, we expect normalization of credit costs by the second half of financial year 19.
The management of Axis Bank sounding confident about things turning around. But let's talk about steel now. International investors are showing interest in India's stressed steel assets now that Insolvency and Bankruptcy Court has established a well-defined legal process to transfer ownership. Global steel giants want to buy Essar Steel and Bhushan Steel's assets. Vishwanath Nair is standing by to give us a sense of who are in the race, Vishwanath.
Yes, what we understand, Harsha, is at this point in time, large companies like ArcelorMittal and POSCO, they are the international investors who are looking at these Essar Steel and Bhushan Steel assets. Now, we understand that under insolvency, Essar and Bhushan are two of the largest accounts. Essar about 45,000 crore worth of debt and Bhushan about 42. So, significant chunk of bad loans stuck there. Apart from these two international investors, there's also Tata Steel and JSW Group who are also assessing these opportunities as they usually have whenever these opportunities have opened up in the past. Now, a particular thing about these ArcelorMittal and POSCO type of investors that in the past their attempts at foraying into India have been very unsuccessful. ArcelorMittal tried to form a JV with SAIL that has been on the block, has been in the works since 2015. Nothing has come out of it. Similarly, POSCO was trying to develop some land into a steel plant in Odisha. That did not happen. They've actually given back the land.
That took a decade and they gave the land back.
Gave it back. So, in the past, their attempts at this organic sort of growth in India has not worked out. So they feel that Bhushan and Essar both have very high quality, good assets. Why not buy it from the current promoters and then run them as individual businesses and then probably turn it around as and when whatever applies in that business then.
So at this point in time, the interest is there.
Interest is there. They are working very definitely towards a bid. Essar's bids are due at the end of this month, and Bhushan's bid by December. That's when their resolution professionals have asked for plans to come in and bids to come in. So they have time till then to place whatever they want to place in front of them.
Okay, so a potential resolution for the entire process is likely if these guys come and put their hats in the ring and a sale actually takes place.
Yes, but remember that this is a better way for them to do it because there's a legal process in place, there's a defined timeline in place, so it makes a lot of sense. Plus the valuations are lower, so banks taking haircuts is going to be that key factor which is going to be changing whether the sale happen or not.
Vishwanath, thank you so much for that.
Thank you.
Let's talk about China. President Xi Jinping warned of severe challenges while laying out a roadmap to turn China into a leading global power by 2050. In a speech that ran for more than 3 hours, Xi declared victory for many difficult, long overdue problems since he took over power in 2012. He said China would continue opening its doors to foreign businesses and defend against systemic risks. He said, and I quote, "Right now both China and the world are in the midst of a profound and complex change. China is still an important period of strategic opportunity for development. The prospects are bright, but the challenges are severe." President Xi's speech went over 3 hours. So what were the key takeaways for investors and what can we expect? Tom McKenzie now joins us from Beijing with the latest. Tom, thank you so much for joining in. What were the key takeaways really? What did you make of it?
Well, I mean, as you allude to, this was a broad and sweeping speech by President Xi covering all sorts of topics, everything from Chinese culture and education to the military reforms and, of course, the economy. And I'll zero in on some of the comments that he made in that respect as well. I think it's more interesting for our audience, obviously, what he said, for example, about the need for greater fiscal and monetary policy reforms, greater fiscal and monetary policy coordination, also reforms around the exchange rate, reforms around interest rates. Interesting coming after what we heard from the PBOC Governor Zhou Shuaochuan about the need and about the desire from him at least to see greater market role in the determination of the yuan. And also we heard from President Xi about the real estate sector as a hot button issue here in China, and he said that houses should be lived in and not used for speculation, a suggestion perhaps that we're going to see these curbs that have been put in place here in China continue. We also heard him talk about the state-owned enterprises, saying that that was an area that needed to strengthen. He wants to see bigger, bolder, more ambitious state-owned enterprises. So we're talking, according to the analysts that we've been speaking about reforms being plotted out for the next 5 years that are always within the prism of a stronger Communist Party. So don't expect any detailed policies that are going to excite the markets quite yet, but these are reforms within a context of a party that has been strengthened by President Xi.
What can we expect in the next couple of days from the Congress, Tom?
Well, next up, we're going to get the PBOC governor speaking tomorrow. And of course, we're going to be focusing on any comments around that yuan liberalisation. We heard comments from the PBOC putting out a statement today saying that the yuan is being used to a greater degree now in terms of cross-border trade, and that the Belt and Road Initiative will see greater use of the renminbi as well. But really, the question on many people's minds is when this liberalisation process is going to start in earnest, and if we're going to see any moves to reduce the capital controls that have been imposed here in China. The other event, of course, that we're looking forward to is the end of the Party Congress. It's expected to wrap up next Tuesday, and then Wednesday, that's the big day when we're expecting to see the new leadership unveiled. The Politburo Standing Committee, currently 7 men, 5 of whom we may see change their roles. We may see 5 new positions filled on Wednesday, and that will give us an indication as to the strength of President Xi and whether he's been able to put his allies into those key positions, and also whether we're going to see any successor to the president, because for now that hasn't been obvious, and we are wondering, and their questions are whether or not he's going to stay on beyond 2022. That is a big question on people's minds here in China.
Tom McKenzie, we'll leave it there. Many thanks indeed for joining us with those details. Tom McKenzie reporting from Beijing about from the Congress. It's been an important transition period for China, and President Xi has laid out the economic roadmap, taking China to become a leading global power by 2050. Back home and telecom, Airtel could take a leaf out of Reliance Jio's book, says Kotak Securities. The brokerage says the country's first private telecom operator could have lifted its EBITDA or its profitability in the first quarter had it followed the same accounting policy followed by Jio. Samvat Sarkar is standing by to tell us how following Jio's path could have been good for Airtel.
So Reliance Jio surprised the street by posting a positive EBIT in just 3 months of commercialization. So how did they do this? By capitalizing few of its expenses and by choosing a different method to charge depreciation. Now in the second quarter, Jio capitalized part of its employee cost, network cost and interest cost. And for depreciation, they chose the unit of production method. Now this is different because Airtel and Idea choose the straight line method to charge depreciation. Now if Airtel, as a top telecom player in India, would have capitalized its network cost and chose the method that Jio did for charging depreciation, then according to Kotak Securities, Airtel's EBITDA would have been 31% higher in the first quarter of financial year 2018. Now this is the representation of Bharti Airtel's Indian wireless business. Now the revenue, this is the actual number and this is the hypothetical number. Now the revenue would have remained the same, but if Airtel would have capitalized the network costs related to spectrum which are not yet operational, then it would have saved its total cost by 16%, thereby lifting its EBITDA by 31%. On the other hand, the EBITDA margin would have expanded by 11 percentage points to 45% in the first quarter of financial year 2018. Now, if Airtel would have chosen the unit of production method to charge depreciation, then its depreciation cost would have reduced by 30%, thereby lifting Airtel's EBIT margin by 2.8 times to 27.7% in the first quarter of financial year 2018.
Samvat, thank you for putting those numbers in perspective. Samvat Sarkar reporting on what Airtel could have done. That's according to a report by Kotak. The Punjab government's decision to provide cheaper power to industries will hurt its distribution companies. That at a time when utilities are struggling to resolve the debt under their Uday scheme. Chief Minister Amrinder Singh yesterday announced an industrial tariff of 5 rupees per unit to boost business activity in Punjab. Bhanvi Arora filed this report.
The Punjab government has reduced the industrial power tariff to ₹5 per unit for 5 years. This will be effective from November 1. Now, this is part of the new industrial policy which was passed by the cabinet on Monday. It says that this has been done to boost the industrial activity and attract investments. But analysts told us that this might hurt the revenue of the state DISCOM, which is already struggling to recover the debts as part of the Uday scheme. Now, Punjab State Power Corporation Limited already has a debt of ₹12,000 crores, and with this move, it would cause a revenue impact of close to ₹1,850 crores for the utility. Now, analysts say that the government should preserve the health of the utilities by giving a budgetary support. The Punjab government has also directed the municipal corporations of the state to levy a 2% tax on consumption and sale of electricity to recover some revenues. Power producers are happy with this move because they say that reducing the power tariff will boost the demand.
Bhanvi Arora reporting from New Delhi. MAS Financial Services listed on the exchanges today at a 45% premium to its issue price. In a conversation with Bloomberg Quint earlier today, Kamlesh Gandhi, managing director of the company, said that the microfinance lender has plans to expand to different geographies. Listen in.
85% of our business comes from Gujarat and Maharashtra, and we have kept the powder dry for our future growth in terms of our expansion in other 4 states, that is Rajasthan, MP in the west, and Tamil Nadu and Karnataka in the south. MEL and SME is our speciality, and that's a huge market, but I must share with you as a practitioner that they're very high entry barriers. So MEL and SME will grow above average, whereas two-wheeler, commercial vehicle, and we have recently started used cars also, will grow below average if we are talking about a growth of anywhere between 25 to 35%.
That's the listing. We leave the markets pretty much where we started out the show at 10,000, about 210 on the Nifty. Out of time. Thank you so much for joining us on lunch. Coming up next is a special show, Saal Mubarak, on the other side.